Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for June the 2nd, 2010. Now our first position for tomorrow is going to be in light sweet crude oil futures contracts. Now what I'm seeing happening here is very interesting. We've got our predicted true strength indicator from Vantage Point has crossed over the trigger in heavily oversold territory. This is good for a reversal move after we get a minor correction. Our predicted MACD has also crossed the trigger. Now what I want to point out right here is that the predicted medium and short-term differences are both overbought. However, the predicted long-term differences from Vantage Point are actually just now going over the zero line. This suggests in the longer term, the medium to longer term, that crude is likely to move higher. Now we've got our cross of our 3-day crosses has crossed over our 8-day predicted moving average, but not over our 18-day. We've closed at 72.58. Our three main predicted moving averages, are 72.83, 72.20, and 73.67. Now let's go in and have a look at the daily report, because this is what we're going to be using. We're somewhat counter trend here, but we're looking at our multiple indicators from Vantage Point to assist us here in the next direction of the crude contracts. Now, bringing up the daily report from Vantage Point, again, I like to keep my charts clean and everything, and I like the daily report to stay with the daily report, and I keep the neural index and all that other stuff off of the main chart to keep it uncluttered. Now, we have 74.23 as the high for tomorrow, and 71.07 is the low. Our neural index is down. Now, the neural index is, again, a 24-hour indicator. It is not a long-term indicator. So, make sure I want to point this out. We can see that our predicted short and medium term differences have come down from 1.78 to 0.67, 1.94 to 1.76. However, this is the key one I want to point out to everybody right here. We were on the long-term difference, we were actually 0.04, we're now 0.53, which suggests in the longer term, medium to longer term, that sneaky little signal is catching up behind us here, and it's suggesting that crude, after this little bit of a pullback we have, is probably going to move higher. Now again, the neural index, we're using that in this particular case to warn us that the market's moving lower, but that's terrific. We can use that to get into a better position. So 71.07 is the area we're going to be watching on the crude contracts, and for tomorrow we would like to see a $2 to $3 move on crude contracts, which can be quite substantial, so looks like a good trade forming there, and we want to watch that for tomorrow to progress. Now, just to quickly have a look also here, we want to look at our short, medium, and long-term crossovers just to see what's happening. Now with this one, I would be more inclined to have a look at the medium term to start with, just to see what's happening there. So as I suspected, this medium term crossover has been made. It's crossed over to the upside. The short term, which is a very, very short term indicator, usually 24 to 48 hours, it's struggling a bit. Now looking at the long-term crossover here, we're going to pull this up. The long term is actually sitting flat with a slight cross over the trigger. So again, everything looks good here, that after we get a minor pullback on the crude towards that $71 a barrel, we can then get into our buy position. Now stops in this particular case, in my opinion, should probably be in and around the 69 area, just to be safe. Now you always want to leave yourself $2 to $3 stop here. We don't want to be using 30, 40, 50 cent stops, because in this kind of market, with the volatility with the Eurozone, the equity markets moving all over the place, we don't want to get prematurely stopped out. Now our second trade for tonight, we're going into the Great Britain US dollar. Now this pair, this has been a great trade as of last week. I touched base on it in the Forex Market Outlook. We've been buying this off the 142.50 area for the last week. Now this looks like it's starting to gain some strength here. Now again, predicted true strength indicator for Vantage Point has crossed over the trigger in oversold territory, as is the predicted MACD. Now again, our short and medium term differences are somewhat overbought, but if you, again, much like the crude oil contracts, you can see that the long-term differences are on the zero line, and they're just starting to gain strength now. This should push a crossover, a completed crossover, on the triple EMA in the days ahead. So for now, we want to identify some key areas: 145.68, 145.21, and 146.15. Now now that we've identified those key levels, in this particular case support, because we've closed at 146.48, let's have a look what we're looking at for tomorrow for the predicted high and predicted low. We've got 145.20, 147.20 neural index up. Everything is looking good there. Our predicted short-term differences have gone from 27 to 67, 35 to 74, and now even our long-term differences are rolling over to the buy side. So everything looks good that British pound US dollar is going to continue to move higher, but again, it's going to play that daily range, so we don't want to panic. What we want to do here is wait and let the market come to us. I'm just going to pull that back up again here so everybody can see. Now again, for tomorrow, our buy position, we're going to be using this 145.20 area, or as close to that area as possible. Now the one thing I do suspect may present a problem getting to 145.20 is this right here, 145.68, which is the predicted 3-day moving average from Vantage Point. We then have the 8-day at 145.21. Anywhere between this area, this 40 pip spread here, is where we want to get into our buy positions, and our stops will be below. In this particular currency pair, I would have about the stops below the 144 level, because again, the British pound US dollar normally on a day over day basis moves about 150 pips a day. So 20, 30, 40 point stop losses on a currency pair like this are simply not going to cut it on a short, medium, or long-term basis. So again, very important that you do not get knocked out of this market prematurely. Now our third trade tonight is going to be in the ETF market. Now again, we've traded this pair, the Taiwan Index Fund. We've traded it for about the last year here on Trader Planet. I've repeatedly put this out as trades. Now whenever this Taiwan Index moves down into this $11 range, in my opinion, it represents an excellent buying opportunity. In this particular case, we have the predicted true strength indicator from Vantage Point absolutely bottomed out in oversold territory. Our predicted MACD has just recently made the cross to the upside. Predicted medium and long-term differences are coming out of heavily negative territory. We've closed at 11.17, so let's have a look at this. We're going in for a counter trend position. We're going to try and catch an early trend reversal. We've got signals here from Vantage Point suggesting that that's going to happen. Now again, the daily report, highly useful here because it's going to tell us what the predicted range is for tomorrow. Now I'm just going to brighten this up so everybody can see it. Now looking at this for tomorrow, we've got 11.12, we've got a close of 11.17, we have a close of 11.12 with a high of 11.32. The neural index right here has turned, the neural index is down, excuse me. The predicted short-term differences are beginning to roll over to the positive side. Now again, we're in heavily oversold territory, and this represents, in my opinion, a buying opportunity on this ETF. Now, a number of reasons I like this ETF. Taiwan outpacing China on a number of different levels, and we have a 4% dividend that's paid on the Taiwan. The EWT Taiwan Index Fund pays about a 4% dividend. Another great reason for a medium-term trade to start getting back into this. Now again, looking at things here on this chart, we can see a number of things that are happening. This predicted MACD has crossed over this trigger. Predicted true strength indicator likely to follow very soon. We have a base sitting here. We had a very strong base sitting at the $11 range, which is, we've got this one candlestick that dipped just below the $11, and it immediately shot out of there by about 50 or 60 cents, which is a pretty considerable move on an ETF like this. So what we're going to be doing, this is an intraday trade, and for you longer term traders, we can expect a move back up in the weeks ahead. We should see a move back up to at least test this 1167, somewhere between 1167 and 1250 over the next several weeks to a month. So again, another excellent buying opportunity on this ETF. So again, these are the market positions for June the 2nd, 2010, and my name is Greg Furman, market analyst here at TraderPlanet.com.